Hey guys, JJ here. Welcome back to another video. Gonna be a quick video tonight. So we are red on this day. Um, we are minus $200, which is 2%, which is totally fine. These losses they happen. You just have to kind of eat them and uh, you know. But I will say it's my first red day in a while because one red day, green, green, red, green, 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 green. So all in all, um, this is our wow man, this is our freaking this is our third red day for the entire month, and it's April 17th. That's not bad. I mean I'm still not like that. I mean I've had these good days, but I've had losses of trades. Just my wins have eaten those, except for today because I lost both trades. Let's go ahead and talk about them. So I will say I woke up and I thought I had to be at school today, but there was a schedule change, so it turns out I didn't have to be at school and yada yada yada. So I went ahead and got to school because I didn't know this, and I went ahead and get a little market analysis and set up my limit orders before I went to school. And I got to school, realized I wasn't supposed to be there, came home and saw that I was already entered in these trades. I wasn't quite stopped out of them yet, um, but I got stopped out later, as you can see. Um, so I've gotten a little used to being able to trade market open and having time on my hands to just sit there and look at the markets. Um, Today I'd say it was just a bit rushed, so I did a sloppy market analysis. I didn't really flip to the higher time frames and see what was going on and stuff like that, and that's on me. So we'll just go over my rights and wrongs. Right, had pre-decided entry points. Followed my risk management. I lost my 2% on the day and I called it. Wrong, sloppy analysis. Should have waited for more confirmation and better setups, and could have targeted for value gap on SPX. So let's go ahead and pull this up. So we'll go ahead and talk about this gold trade first. So let me flip to 4 hour. Sorry, 4 hour. Yeah. So there's a 4 hour for value gap. Oops. So we had this 4 hour for value gap that when I got stopped out, price winded up filling, as well as equilibrium. As you can see, we had this low down here to this high. A lot of bullish pressure lately, so price wanted to rebalance equilibrium, stopping me out. I would have saw this had I, done a more in-depth analysis and actually tried to see where price wanted to go. But to me, I guess this was enough for an entry. We had an order block right here. We swept. I mean, after we had swept this liquidity, and we swept this liquidity, filled a fair value gap and an area of accumulation. Um, I mean, this wasn't a terrible setup. We had some rejections. We went higher. Um, and then I was like, okay, well, we tapped in this order block several times. If we tap it again, I want to enter. So what happened? Price tapped in, entered me in the trade, went in profits for a bit, bailed down to stop loss. So this right here on a low time frame was a good setup. Had I done a more in-depth analysis and flipped to the higher time frames, I would have saw a couple things. First of all, I would have marked out equilibrium, and I would have been like, oh well, price. I mean, it's in a retracement. It's broke. I mean, it's broken structure already downward. I think price is probably gonna want to continue lower to equilibrium, and maybe this fair value gap, right? And then I was like, okay, well, what about next, right? Um, just delete this and this. Something else I would have noticed was price was filling this fair value gap right here, this hourly fair value gap, hourly bearish fair value gap, right? So I wouldn't have been. Uh, I mean, I didn't have a completely incorrect bias, just the incorrect bias at the time. Price did eventually, break structure, filled an order block, and continue higher. Right here. fill this order block, continued higher. And I'd say the main thing here on low time frame, not a bad setup. High time frame, just didn't have the bullish confirmation that I needed. So in the future, just keep an eye out for those higher time frame confluences. SPX, so semi-correct bias. So what do we have here? Sell side liquidity. Alright, we've been in an uptrend. We have an area of accumulation right here. Okay, up, up, up. Filled a 15-minute bearish for value gap. Started continuing lower. Broke this prominent low. Broke this prominent low. All that stuff, right? What happened? Okay, price filled the 15-minute for value gap. Yeah, filled both of these 15-minute for value gaps, right? And then price, continued lower. I saw price right about here. I was like, okay, I want to enter off of this 5-minute for value gap if price retrace. So I set my entry, stops above these highs, and then targeting these lows. Now this was not a terrible trade. Okay, this was me not keeping the higher time frames in mind, right? So this was a 30-minute value gap overall, but you can kind of shrink them if these for value gaps, like if you see a 30-minute for value gap, right? And then you see a 30-minute for value gap, right? Right here, okay. Wow, okay, that's a big for value gap. 15-minute, okay, looks a little smaller. Let me adjust it. 5-minute, same candles, looks a little smaller. Same for value gap, same low. It's like for value gap within a for value gap within a for value gap. It's you're gonna target the most in one. So what happened? Price targeted this for value gap. I thought it was gonna take out sell side liquidity down here. It did not do that, right? Had I done a trade like this, would have still been a 2R. Not as ambitious. This was ambitious. I don't think it was necessarily bad to target this low. I just think that I should have kept the higher time frames in mind and realized where price was likely to go, right? I mean, we had already filled everything down here, right? We made it for value gap, okay? I'm curious to see equilibrium and now. Yeah, so this is a for value gap within equilibrium, okay. So let's talk about what happened. Price came up, boom, went down, came back up, continued all the way down, filled the fair value gap. Would have made this a 2R trade, right? And then price, just boom, lighted up, consolidated, went up, came back down, stopped me out, filled this 15-minute fair value gap, as you can see, filled this, continued lower, came back down. I think price is looking like it's gonna, filled this for value gap. So price could enter this for value gap and continue lower, then take out sell side liquidity. I'm not sure. I think something else is I executed on the 5-minute time frame using 15-minute. I mean, it's not bad to execute on a 5-minute using 15-minute value gaps and everything like that, but it's just it's one of those trades that are gonna take longer, right? You always see those people and stuff. They take those trades. Yeah, the videos are sped up, but they're in the trades like 15 minutes, right? So I think I'm gonna start scaling down to the 1-minute time frame from now on, because yes, still keep the bigger time frame confluences in mind, but just execute on these lower time frames. Like, okay, what would have been a good trade this morning, right? One that was very plausible, very feasible. I would have been like, huh, okay. We have that big 15-minute. Oh, we have a 1 minute fair value gap here. Okay, let's go up to the 5 minute. See what it's looking like in that area. Oh, okay. This whole thing's a 5 minute fair value gap. Okay. Oh, wait, where am I? Yeah, right here. This whole thing's a 5 minute fair value gap, right? And this was at 8 a.m. right when I was on the charts analyzing and stuff, right? Been like, okay, well, let's see. I probably wouldn't have entered on this trade because I have this fair value gap up here, but so I have this right here. Price did eventually come into it, right? So I could say, okay, we got a 1 minute fair value gap here. Now this would have been later, right? But I mean, I was at school at the time, but I still could have set up a limit order, right? Set up my limit order, entry at this fair value gap, stops above these highs, targeting this area of liquidity. That is a 2.8, nearly 3R trade in the span of, from when I entered, which would have been right here on this candle, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes. Sorry, 11 minutes. And I would have been out of this trade with a nearly $300 profit. And I would have, it's just one of those things where I need to start learning to understand higher time frames, right? And keep executing on the lower time frames, such as the 1 minute. Now, there's nothing wrong with executing on the 5 minutes. I just have to understand I'm going to be in those trades a little bit longer because it's bigger picture. Anyways, I hope you guys enjoyed today's video. If you did, please like and subscribe. And if you have anything, please leave it in the comments. Go follow my Instagram, link in the description and in my bio. And thank you all for watching. I will see you tomorrow.